Ladies and gentlemen, can you please be seated so that we can start? We are now moving to our first round of discussion on the topic of transition to international financial reporting standards in the Kingdom of Saudi Arabia and our learning so far. In the last few weeks, we have seen the listed entities in the Kingdom of Saudi Arabia have reported their first interim financial statements on the stock exchange. Obviously, this was a huge task, and I think it has been done successfully. Dr. Ahmed Maghamis was also talking about it. We strongly believe that there are still a lot to be learned, especially given the fact that effective January 1st, 2018, the other entities will start their reportings under IFRS. To share the experiences, we have requested some of the leading practitioners in the Kingdom of Saudi Arabia to come and share their experiences with you. May I request our panelist, Mr. Fawaz Al-Fawaz, Global CFO Tasneem, to come on stage, please. Mr. Khalil Al-Sadais, Head of Audit and Office Managing Partner, Riyadh, KPMG in the Kingdom of Saudi Arabia. Mr. Ahmed Abdul Fattah, Director, Assurance Ernst & Young. Mr. Yves Graf, Head of Corporate Finance, Al Marai. Thank you, gentlemen. This discussion will be moderated by Mr. Moazzam Ali Shah, who is the Group CFO, Al Zamil Industry, Trade and Transport in the Kingdom of Saudi Arabia. Can I request Mr. Moazzam Ali Shah?
Thank you very much. And good morning, ladies and gentlemen. First of all, I would like to congratulate the two recipients of the third most valuable contribution awards this morning, Tariq As-Sadhan and Ashar Noor. The name or the title of this award, which was the third most valuable contribution, was kind of deceptive to me. I thought maybe it's third in the ranking. But actually, it's not third in the ranking, it's the first in the ranking, but probably we are giving out these awards for the third time, and that's why it's the third most valuable contribution award. Ashar has been a great friend of mine, and this is the first time in my life I have seen a conference or I am attending a conference where he is not one of the speakers. So that's something which is very, very unusual. But anyway, let me just start the discussion by asking a couple of questions, very basic questions. Since the topic or the theme of the discussion is IFRS implementation, or what we have learned, for those of us who have already gone through the process, what we have learned from this transition. So let me ask you this question. How many of us sitting in this hall have already gone through this transition? And by the way, as a footnote, our guest of honor sitting in the front row are completely exempt from answering this question. So we got a couple of people who have actually gone through this process, which is excellent. And how many of us are still going through this process? So either they are in the middle of the process, or they have started it already, or they are towards the end of this transition. So very nice. And how many of us have not even started this process as yet, where they know that, the cutoff date is the 1st of January of next year? I hope none of us. Oh, you haven't started the process yet, so hopefully you'll start it soon. And the last question is that how many of us are thinking about a career change or an early retirement because of this daunting transition of IFRS? No, nobody. Yeah. So we got a couple of people there who are thinking about an early retirement or a change in profession. So that's good. Now, IFRS transition actually it could be a daunting process. And what we have seen is that a lot of companies in KSA, they are scratching their heads and they are trying to figure out how to get this process right in the first time, right? So it could be a daunting process. Now, for those of us who are new to the concept, and I'm not sure we have a lot of people who are new to this concept of IFRS. IFRS basically are the set of accounting standards which are developed by the International Accounting Standards Setting Board. What is the objective? The objective is to actually harmonize the accounting language all across the world so that we don't have different standards. We have more harmonization. It's easier for the users of financial statements anywhere in the world to be able to read and understand them. Why is it so important for KSA at this point in time when the economy is actually going through a transformation? It is simply because the kingdom, where the kingdom has been, the business landscape of the kingdom has been opaque historically. They are trying to open up their doors to the foreign investors. They are trying to attract the foreign investment in the country to diversify away from purely an oil-based economy. So that's the reason why it is so important. And obviously the kingdom is also eyeballing. It's one of the most significant IPOs in the history of the country, which is for Saudi Aramco. And in light of that IPO, upcoming IPO, the convergence to international financial reporting standards is extremely important. Now, why? I mean, we have seen that in any country, in any jurisdiction, the local accounting standards actually go through an evolution process, right? So we have seen here in Saudi Arabia, the SOCPA standards have gone through an evolution process. We have seen in other parts of the world where their own local accounting standards have gone through an evolution, right? So what is the difference between those changes and the changes that we have either experienced in this year or we're going to experience next year? And the answer is very simple. That evolution in the local accounting standards was a gradual change, whereas IFRS adoption is a sudden change. And that's why the concept is just so different, right? With this, we have a lot of questions. I mean, a lot of companies must be having a lot of questions in their mind as to whether it's the IFRS adoption is a technical accounting change or is it a business transformation? Does it have any commercial implications as well? What are the implications of adopting IFRS for SMEs? Because we have got a huge pool of SMEs here operating, and I actually represent one of the SME. So what are the implications of adopting IFRS for the SMEs here in Saudi Arabia with regards to extensive disclosure requirements and also the cost implications? How to get it right in the first time, how to actually run this project, and what are the do's and don'ts while we are actually transforming this change. So some of these questions have been bugging our minds, and to answer all of these questions and to share some of their experiences, we have actually invited a panel of distinguished guests who will actually speak to us, who will share their experiences with us, and they'll be here to answer some of your questions. So we have already gone through the introduction. I was thinking about if I were given a chance to introduce them, I wouldn't be standing here like this and take a chance to introduce you without reading it on the paper, because I cannot afford to make a mistake in your introduction. But the introduction part is already done. So we'll just go straight to the first round of the questions. Now, let me set the stage here by actually asking the first question, because when you talk about the IFRS, when you talk about the IFRS transition, or when we talk about adopting a new standard, which actually is in line with IFRS, there is an accounting debate of rule-based versus principle-based approach of preparing financial statements. So to me, or for a layman, and I'm not a layman, I actually come from the finance background, the rule-based or the principle-based might imply that rules are something which are enforced, and principle is something which is intrinsic, which actually comes from within. So that's kind of a layman understanding of rules and principles. So I would like to kick off the discussion by asking the first question from Khalil Al-Sudais, who is managing partner at KPMG, to actually enlighten us with this approach of the difference between the rule-based versus the principle-based accounting standard.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على نبينا محمد. I'm honored to be sitting in front of this guest and to really speak and enlighten you. Actually, I'm sure most of you would really add more value to me and enlighten me, but I had the privilege to be standing here and selected, so thank you for the ICAP chapter in Saudi for selecting me. And you said a lot of things about the IFRS and the IFRS convergence and the rules-based versus principle-based. And I think, starting point, I would say that in theory, you would anticipate that a rule-based will increase the accuracy, will reduce the interpretation of accounting terms versus when you deal with a principle-based standard where it is focus is more around the substance of the transaction. And therefore, it gives more freedom and flexibility for interpretation and assessment. Nevertheless, at the same time, such a choice of principle-based make it more focused on understanding the substance of the transaction and what is behind any matter to really decide what the appropriate accounting treatment for the same, rather than being a rule-based, because sometimes while the rule-based concept, which is should ideally increase the accuracy, reduce the interpretation, at the same time, when you know the rules that you should follow to achieve a certain accounting treatment, then actually you get the rules as well to bypass them. So instead of really trying to drive things to more accurate ways, you really encourage actually sometimes finding other ways to bypass the rules and the suggested typical accounting treatment. And that, I think, one of the key criticism for the rule-based standard and why that usually a principle or a principle-based move, it's been more appreciated. I think that is really, in my view, a fundamental difference between a principle-based and a rule-based. At the same time, adopting a principle-based standard, and in particular the IFRS as well, is bringing various challenges, and probably one of them, or a key element, is the concept or promoting further the concept of fair value rather than the historical cost. And I believe us as accountants generally, and in this profession, we find the historical cost more of the home for us. It's always a reference that is a clear basis for it are clear, while when you talk about fair value and other bases of the measurement and assessment, then you have to go a lot of judgment and assessment and considerations that always subject for different views and different consideration. Now, when we talk about the IFRS and the principle-based, it's sometimes interesting how the IFRS bringing a lot of terms, and especially when you talk about the terms of likelihood. And I get a big list actually of about 27 different terms talking about the likelihood from a different interpretation, or different words to talk about the probability and the likelihood. And I find that actually that open a wider room for interpretation for the profession in general. And you won't find, through at least my interaction with people in different jurisdictions, you find a different interpretation for those terms. I'll take examples when it says no realistic alternative. How would you really think of this? Highly probable, significantly more likely than probable. Reasonably certain. Probable more likely than not. More likely. Likely. And the list goes on, and you talk about these all terms about likelihood that coming in a different standard. And I would, if I ask everyone to interpret any of those terms in this room, I don't think I'm going to get less than 10, 15 interpretations. And I think that actually what is really the challenge around the principle-based, and it's bringing a real challenge around it. You mentioned about, or some talk was about actually what is really the value of this move to IFRS for the whole economy, and I think it's very important. It's been timely actually when the decision was made as for a country like Saudi, part of the G20, and now with the Vision 2030 as well, and the consideration for bringing international investments and other elements, and also promoting the Saudi companies to go across borders and operate internationally. It is very important to have a general accepted framework around the globe and become part of that big club that adopting IFRS. One straight answer to the move to IFRS and the benefit is enhancing comparability of information. And that by itself improved the investors' confidence in the market. It bring better comparison for investments options. Actually, when investors want to consider where to go, where to put their money, they will have a better base to compare and make that selection. I think another also important element around the people, actually, it's improve employees' skills, because it's give an access to a wider pool of trained and skilled people, and also give people locally a better access to a bigger pool of trainers and training material that available on a generally accepted framework. The other thing is actually for, let's say, big corporate. It does allow them to have more standardized practices around their entities and operations across the globe in an easier way, rather than having to do different reconciliation and adjustments. And at the same time, from an investments perspective, it gives access to broader investors that could go into sukuk, could go into bonds issued by the local entities, also have more interest in their equity, as well as giving those same thing for the local entities, the opportunity to go for international investors to put their money with them as well. So I think it goes from both sides, and apologies if I've taken extra time.
Thanks a lot for a great answer. You just briefly touched upon the fair valuation or the revaluation of assets. So I'm just being curious, and I know this is not one of the intended questions for this session, but since you touched upon it, so I'm just being curious. Is it going to be applicable here in KSA?
Yeah, I think it's a very good point. I think at the moment for listed entities, the Capital Market Authority had taken the decision, given the concern around the maturity of the market and its ability to make such sudden move to IFRS by within all component, and to move from that historical cost concept that's been lasting for a while to such a fair value. They made that, or selected or resolved that it will ban the adoption or using the fair value irrespective of the key element that is considered was not relatively implemented for when it comes to the PPE or investments in properties and other similar elements for the coming 3 years, which is starting from 2017 and then another 2 years to come. And by that time, they will reassess if they believe the market really reached a reasonable level of maturity to go for it. And I think with that, they're also talking about, or the new authority for certifying valuers to really ensure that we build the whole ecosystem to allow such a big move. At the same time, I think the good thing now at the moment, as far as I know, for those which are not to go after or to implement the IFRS, the listed entities, they are still, the option of fair value on those areas is still going to be available for them. I haven't, as far as I know, SOCPA did not omit that option, and there was no such resolution from the Ministry of Commerce or any other regulator that ban non-listed or non-public entities to adopt or to use the fair value option. And I think that's going to be a very useful thing for the market to test and trial on those, let's say, less risky entities for the market, at least, versus those which are publicly traded companies. So I think that will be a very good move. I believe if we stand waiting for the market to be mature and ready for it, it will never. You have to start practicing. You have to really, we will see certain issues sometime in the implementation, and that's the nature of things. But then later on, or at a later stage, you'll see things evolving, and the maturity comes over the time.
Right. I'm going to move on to the next question from Ahmed Abdul Fattah of Ernst & Young. So what skill sets, the professional skill set, do you think is required in adoption of principle-based standards here in Saudi businesses?
Yes, thank you, Muazzam. First of all, I'm proud to talk to this great group of audience. And thanks to the ICAP who selected me to present to you today. First of all, as my colleague Khalil Sudais mentioned, IFRS is a principle-based accounting, a principle-based standard, and it gives actually a broader guidelines. It goes by objective, and it implies substance over form. So in these situations, and giving the wider and variety of options under IFRS, it involves a higher risk, actually, of implementing the judgment when implementing accounting standards. And the professionals in Saudi Arabia will have to realize the risk associated with this implementation, because incorrect judgment might lead to significant negative consequences, and this will have to be considered seriously by the profession and the people working in this accountants and professions in Saudi Arabia. When you talk about principle-based standards and rule-based standards, and what is the best for the accountants and for the professionals to go with, we would say, or the history says that the principle-based standards would give more reliable financial information, would give relevancy to the financial information, and would also cover the consistency that should be there across the financial periods and within the same industry. So in order for the professionals in Saudi Arabia to really ensure that this is happening in the financial reporting when they implement IFRS, they have to have deeper knowledge of the standards. They have to have a deep knowledge of the industry, of the regulations and the regulatory environment in Saudi Arabia, so that when they report and when they implement international financial reporting standards, they come up with relevant, reliable, and consistent financial information. This would need definitely proper training, knowledge, deep knowledge, more communication between the professionals in Saudi Arabia and the regulators. So the open communications with the regulators and with the regulatory bodies in Saudi Arabia is really required and more critical at this stage to eliminate any inconsistency and to really provide the reliable data and the reliable financial information that this profession needs in Saudi Arabia, especially with the first year and the first stage of implementation. There are some complex and significant accounting standards when it comes to the implementation of international financial reporting standards. These are of significant magnitude and really significant impact when they are implemented. So this again needs the deep knowledge, the more open communications between the professionals and the regulators in Saudi Arabia. And again, the first 1 or 2 or 3 years even of this implementation in Saudi Arabia will need more of training and deep knowledge for the people to go through this great conversion and significant conversion, at least in its first stage of implementation.
Great.
Thanks, Morgan.
So one of the objectives of SOCPA is to help facilitate the Vision 2030 of Kingdom, right? So how do you think, since you represent the industry, and we've got a couple of gentlemen sitting in the middle who actually represent the profession, how do you think that the profession can help the people in the industry, the boards, and the businesses at large in understanding the implications or the impact of adopting the new accounting standards?
Thank you, Muazzam. Good morning, ladies and gentlemen. Thank you very much to the organizers who actually give us the opportunities to participate in this prestigious 5th Saudi Pakistan Accounting Symposium. This is, to me, is a really great opportunities. Thank you again for the questions. 2030 or 2020, I think we should start with 2020 before we go to 2030. It's transformations, projects for every sector. We are, as a professional on the accounting and auditing, as one of those sectors which really important for these transformations. We hear our colleague, Mr. Sadhan, mentioning that everybody is busy and the government's sectors became, very effective and busy to participate in those transformations because of the, he's saying, okay, there is today they are serious and they want really to catch up with different, let's say, initiatives. When we start really thinking of go to transitions to the IFRS, as far as I remember, we've been discussing this for the last 10 years. And some of us, has different opinions. We should go fast. We should really wait and, make the full preparations. And thanks God, we have made the decisions on the right time, and we moved to those to the conversions of the to IFRS, which sometimes it's really challenging, but it's really good really to look at it from different angles. One is from the business, second is from the organizations, and from financials. So when we start really thinking of these transitions, we know that there are a lot of challenges. There are a lot of, work needed. There's a lot of communications and cooperations between the organizations and the corporates and the audit firms. And with the SOCPA and the CMA, arrangements and leading this preparations and helping the society, to be prepared to accept and to understand the requirement, I think that facilitates a lot of these transitions. So it became really important for Saudi Arabia to go with these transitions on the right time, being given, from the regulators. I think that definitely will support the transition of 2020-2030 by improving the transparencies, given more comparable financial results, helping the users and the investors to understand the financials and the performance of the corporates and listed companies, which they can really make investment decisions based on the standard reports and with quality notes and reports, which in my opinion, it's really gonna evolve. I think, yes, we are really managed and we able, to do the full transitions to the IFRS by all of the listed company, but I think still there are a few challenges ahead of us, which we need really to continue to be prepared for, and make sure that, okay, all these notes and disclosures being polished and become, in a quality form for the users and investors. Second, as we know, Saudi Arabia is one of the largest Arabian country, maybe comparable to Algeria or other, which we need really to be prepared for the challenges ahead of us of the open the international investors to participate on our economy. And I think that it's going to really facilitate that to bring the foreign investors to the country and invest on a very transparent and available information, which they can really support their investment decisions. Second, also it will help the corporate and the listed companies to be able to raise the capital from overseas, which can really reduce the cost and also to improve the liquidities. So from that angle, I think it's quite important to build the confidence and build the right quality information for to be available for those investors to make their judgment and to facilitate their decisions. So from that, I think with full cooperations between the corporates, the professionals, the audit firms, I think we have managed really to meet the target, publish all the financials according to the IFRS. Yes, it's unaudited, and that will, a little bit make it easy for the guys of the auditors, but I'm sure the year end it will be quite challenges, so we need really to be prepared for that. Thank you.
Right. So the quarterly reviews have not been done by the auditors?
Usually, the financial, it's been done by the corporate, and the board and the corporate management are responsible for the preparations of the financials. But, the auditors are really auditing, in a very limited scope on the quarters versus, the year end, they're going to do the full scope.
Full scope, yeah.
So that's, I'm not really going to scare our colleagues, the CFOs and the financial, sector, but, I'm trying to emphasize the point that, okay, there are a lot of information required, a lot of demand from the external auditors, to be provided with, on the year end when it comes, to the full audit scope by the year end.
We're going to come back to your experience of implementing IFRS at Tasneen a little bit. But just building on what you have said, I would just like to ask a question from Yves, who is the head of corporate finance at Al Marai, has already gone through the process of this painful process of this implementation. He claims to be the first one in the kingdom to actually publish his...
Yeah,
I hope it's not a classified information.
First of all, a very good morning, Your Excellencies and
Right.
Respected guests, but also distinguished participants. Indeed, for me it's the third time that I'm going through this accomplishment of IFRS.
Yeah.
It was in Europe, first IAS and then IFRS, and now here it's the third time.
So you got multiple experiences of implementing different standards all across the world. So my question to you is that since you have already gone through the process at Al Marai,
Absolutely.
and we all know that it's not an accounting change, it does have commercial and business implications as well. So what are those implications that you actually had foreseen when you were implementing IFRS at Al Marai, for the present and also for the future?
Yeah, if I may refer to Mr. Khalil and Mr. Ahmed, first of all, I'm following their opinion that IFRS is judgmental based, and also we need professionals and professional knowledge to be established to make these judgmentals in a correct way. That's mandatory, I would say. And I agree also, we are here on the first stage of the implementation of IFRS. It takes time to understand each and everything and to understand the feasibility and the consequences, finally. Secondly, estimates are also necessary to be made. And there we are coming to fair valuation. This is also a zone which is not yet covered. We have, Almarai is a complex conglomerate which has not only manufacturing industries, but also farming,
Agriculture.
which has biological asset valuation. So I'm talking about a huge variety of let's say rules and procedures or methodologies which have to be invented accordingly and to be aligned with SOCPA, with CMA. So you see, and what is probably an impact which has not yet discussed is on zakat. Yeah? We have currently excluded this discussion, but the alignment between SOCPA, CMA, and ZIAT has to be there. Yeah?
Very well
A profound understanding about the consequences on this. And regarding IFRS, the main topic, I would say, is reporting. Whether it's internal reporting or external reporting, the complete structure has to be aligned and to be rethought from the organizational needs, but as well following the external needs. And if you want to go further, then you would probably look into an alignment between internal and external financial statement alignment.
Right.
So that there's no discussion for building up bridges and to make it more understandable. On top of that, which has also not yet been addressed, it's the topic of the segmental reporting, which has a material impact on the external accounting, but as well on the internal. And you can go even further for geographical accounting. Yeah? So what I'm saying is you can look from different angles on your reporting structure, but you have to think beforehand to get to the result requested. And you have to comply with with certain aspects from IFRS, which is at minimum requesting the segmental reporting.
Right. So I think you've touched upon some very important points as far as the reporting, alignment of different type of financial reporting is concerned with the IFRS, which is brilliant. But I want to go a little bit more deeper down into specifically the commercial implications of this transition. And by commercial implications, I mean, did you have any brainstorming sessions with people from sales, from people from procurement, to figure out what is the right balance between your future marketing strategy of Almarai products versus your new selling price, which actually is a result of your traditional selling price and your...
No, I understand. I understand what you are referring to. I just want to say the discussion is more related to the review of the pricing calculation due to the different view on certain rebates and discounts. Mm-hmm. Yeah. So that is where I'm saying the reporting structure is the first topic where you can look, or let's say the chart of account is the first topic you have to look into, where you have to review and to allocate accounts accordingly to the new structure, where the requirements, for example, for rebates and discounts, will be fulfilled accordingly. So the view, that's why I'm saying the view on the reporting will change definitely, and the calculation of prices as well.
Correct.
That's for sure. However, I would say more importantly, it's to make the investors, and there I'm following Mr. Fawaz also, to explain him the difference from a SOCPA-related reporting to an IFRS reporting, to make it transparent and understandable. From the commercial point of view, again, it's more an internal discussion where you will find more easier the alignment, while with the outside stakeholders, it's a more long-term or medium to long-term training and knowledge transfer, because you will not discuss on a daily basis.
Right. I've just been informed that we are overrunning time, so I'm going to just switch gears here with Khalil Al-Sudais. My next question will be, since you represent one of the big four firms in the profession here in Saudi Arabia, so how have you, in your firm, helped the clients in this transition? How have you been helping your clients for IFRS adoption?
Okay, thank you. I think in terms of helping the client, the direct answer would be that we have been engaged with a number of clients actually on helping them as consultant or advisor on the IFRS convergence for a number of them that probably done by us and done by many other consultants. And the other side, actually we've been engaged with our audit client actually to raise their awareness, and our clients across the firm to say that this is coming. You need to really raise up the level of awareness within your organization. You have to be ready for this transformation. It is not only about accounting change. It will have a potential impact on your ERB. It will have a potential impact on your businesses and the way you do certain agreements, an arrangement of businesses, the way that you account for some of your business units as well. So that, I think, was the really awareness through different publications, seminars, and trainings that we held. And I think also on the other side, I think I would take it beyond the client to say what is really our role was for the entire system around this. And I think a key element is actually us focusing on our own people and training them to be able to hold the right discussion with their own clients and contacts around the matter. And I think that is very important for the whole profession. Usually accountant at the businesses, they expect their, service provider or the professional firms to be able to be a good source of information and to really have the right conversation that alert them, increase their awareness. So I think the training and the seminars that we held was a key element. Direct involvement with our clients, both in terms of an advisory capacity or from our other roles and responsibilities with them, and developing and training our own people really to spread the right message was very important. And the other one, I think we do having the benefit of being part of a global firm is actually giving you the access to see how was the practices in the other countries where they have been ahead of us implementing the IFRS, how was their experience, what was the key interpretation, the key challenges that they have dealt with, and how such a matter should be considered. And some cases actually that take, you learn through the other practices around this matter. And one of the key things we noticed, or I noticed that, within this exercise, that there was the SOCPA accounting standard, and there was, to an extent, the SOCPA as adapted, their practice, which has some slight differences. And then you have the IFRS. So I saw it through that convergence process, that it is not really the standard as it says, and then what is the IFRS it's saying is actually what people been doing and adopting. And examples for that was obvious when we were talking recently, and some two circulars came very close to each other around the PPE and the component accounting, for example. And when you also go to rental straight lining of rental cost, actually, this is something you would really read from SOCPA. You know, you feel that it was SOCPA required, but was in both cases not very explicit, not very sharp on it. Then you find the practice slightly different. And then us as a global firm, we took, along with various other firms and with the SOCPA, the initiative to go what other practices, what happened in the other parts of the world, to see what there was their experience around the matter and how to really deal with it. And I think that's the key role of our profession, to really be able to embed other, let's say, experience and bring it over to this market and to the people working around. Another I think opportunity that was fairly available from that adopting is to really bring to the market attention, and it is probably not, you know, something people would be comfortable to say or to talk about, but the reality that IFRS or moving to IFRS was an opportunity for many organizations to streamline their processes and their accounting treatment and practices. Let's say that they were not actually completely wrong, but they were not, let's say, fully accurate. And that was a great opportunity for the organization and the entities and the businesses to streamline themselves. And I think the role of us as professionals here is to really be able to make the right judgment and the call, to draw the line between what is really a correction of error and things which are more of streamlining things or trying to move things where judgment need to be involved, where it's a gray area, and trying to make what is the best treatment. I think this is in a nutshell what I think we could contribute, and we did contribute.
Right. Typically, the big four accounting firms, because of their professional muscle that they have and the strength they have, expertise that they have in their resources and all of that, they can actually they can actually play a dual role here. They can work as an advisor, as you have suggested, so you have been helping your clients in the advisory capacity where you don't have any audit engagement with them in helping them in adopting IFRS. The second important role that I think these firms can play is not as an advisor, but also as an auditor. By not advising on how to implement, but to advise on whether the work that they've done already actually complies with IFRS or it doesn't comply, in order to avoid any unforeseens at the year end once they come into the audit. So I would just like to ask Ahmed you a question on, at EY as an auditor, not as a consultant. What do you advise of your audit client? At what point in time during the transition should they reach out to you and ask you, guys, let us know whether we have done it right, or is there some misalignment from your expectations as auditors?
Thanks, Muaddam. To answer this question, actually, we have to look at what IFRS conversion project implies, or what does it involve. IFRS, excuse me for my voice, I'm just not feeling very well. So the IFRS conversion is, again, first of all, making a diagnostic report and seeing making the gap analysis, changing the accounting policies, the accounting procedures, procedure manuals, then coming to the accounting systems, the IT systems, and changing also some formulas and procedures in the accounting systems. Before all of this, agreeing the accounting judgments, the accounting treatments for the complex and major issues within the organization. Doing all this, or going through all this complex and huge conversion process without involving the auditors at the beginning, might lead to major consequences like delays, disagreements, for main reason actually. The auditor has the ultimate responsibility to sign off the audit report on these financial statements. So again, he is required, and it is within the auditor's responsibility to review the estimates, the major estimates, the major assumptions and the judgments made within the organization, and he will have to convince himself that these are reasonable, consistent, and again, in accordance with the international financial reporting standards. Having said at the beginning that IFRS is a principle-based standards, the company or the organization who is implementing the IFRS conversion, along with its auditors and the consultants who is carrying out the IFRS conversion, will have to make sure that the auditor is involved early at the beginning when they actually take critical decisions about the critical judgments and important estimates at the beginning. After this, and after getting the auditor's agreement to what has been implemented, what is being changed, and what's being agreed, will really make the IFRS conversion process more efficient process, and a smooth process to go through this process till the end of it. Having mentioned this, we have also to cover an important area here, that the auditors will have to keep independence during this process. So the auditor's independence will have to be maintained, and the auditors will have to make sure that he doesn't actually prepare or participate in the change itself. The auditor will have to review the accounting estimates and to audit the accounting estimates and judgment, and not to be physically and involved in the preparation and the management work during this process. So it should be mentioned again that early involvement of auditors is a must to have a smooth and efficient conversion process.
Great. So we'll actually come back to the industry now. At Tasni, you have already implemented the IFRS transition process. So what have you, as global CFO at Tasni business, what was your day-to-day sort of role in that transition process?
Thank you, Mazam. Well, those are good questions. I think we really need to think twice before we answer that question. I'm always saying that, okay, some of those transition projects is actually a journey, but not destinations. We really need to continue improving and creating the environments and cultures to ensure that these transitions projects being sustainable. So the CFO is really playing a big role, of the transitional projects. As maybe one of my colleagues said that, the project will start from the as-is assessments to the strategic response strategy responses, to the to be till the implementations and the test to ensure that, okay, what we have done is according to or to comply with the IFRS requirements. So obviously, the CFO should really manage that project and be the single responsible to ensure that, okay, this project is being implemented successfully. So it needs a lot of planning, a lot of coordinations, a lot of communications. And I think, to be honest, and clear, I think the communications is absolutely key of success factors of this kind of transitions projects. I'm always saying, okay, to the guys and to the BMO projects, if you think you communicate again, because the communication is really a key, to ensure that, okay, all the departments on the organization being aware and understand the implications of the IFRS transitions, whether it's sales department or procurement department to the manufacturing, and so on and so forth. They need to be aware, they need to understand, because they need to start seeing the expected impacts on their functions. And maybe this is also, take us through the other point, which some people, they mix between, the technical projects and, let's say, change management projects. So it's really part of this the transition to IFRS. It's actually, it's simply, I would call it really more to the change management rather than technical projects. So I think what I mean by the change management is the preparations and awareness and the change the mindset of the people to accept, the change in a positive way. So one of the CFO role is really to ensure that those functions and those heads of those departments are really understanding, the project objectives, the goals, and be ready to accept that change and to be cooperative, to be prepared to change the processes to ensure that, whatever they are going to do is really going to support the IFRS compliance, whether in sales contract, procurement contracts, the leases, and others, of the area which can impact the IFRS convergence. Also, we need really to pay some attention, or the CFO should pay some attention, especially if the business in a global base, to look at the implications of the tax in different countries. I've seen some really expert here in tax. We have Nu'man, my friend there, who actually happy really maybe to also to expand on that. But I think the tax element is also one of those need to be looked at and see what is the expected implication in different countries to ensure that the systems and the process is really geared to handle that. Basically, what I would say about this project, for the CFO who actually really maybe was some of the SMEs and the other corporate, other companies which they're going to be prepared to implement the IFRS in 2018. So I think, we need really to plan ahead of time. We need really to look at it from different dimensions. It's people, processes, and technology. We need really to pay attention to to all the details. We need really to train people as much as we can and prepare the awarenesses to all the departments, getting the people prepared, to spend extra time and effort, looking at the size of the finance functions to ensure that, they will be capable, to handle the IFRS transition requirements. We need really to look at our IT capabilities and see, if they are really capable to enhance the systems to make it comply with the IFRS convergence. Make sure that, we have the operating model or, the data availabilities to support the disclosures and notes to be available, whether it's in my friend mentioned, the segmentations, or the revenue broken down by region, by country, and so on and so forth. So I think the CFO role is really important, and part of it is really planning, control, ensure that the proper communication is there internally and externally. He should really manage also the shareholders relationship to ensure that the governance in place, the board, the committees, and also the CMAs, the other regulators, to be ready to answer any questions, and also to prepare certain template or ease explanations.
Sorry, Fawaz, I'm going to cut you here. I'm really sorry about that. There's a change in the timeline for this discussion. So what we can do is now, just in the interest of time, I'll just move on to Yves. Yves, you got just 2 minutes to answer the last question.
I will try to.
I wish we could continue. I wish we could continue with the next round of our questions, but unfortunately, we're not going to do that. So just the last question from you, and then we'll invite questions from the audience and conclude the session. So Yves, just tell us your experience about IFRS implementation at Al Marai. Who was the project sponsor? Was it the CEO? Was it the CFO? Or was it someone else? And did you use your internal resources for this transition project? Did you utilize any of the services of one of the big 4 firms or any of the consultants to come and help you with the process? And what were the learning outcomes? So the question itself was very long, but just 2 minutes answer.
I will try. The CFO and myself were the sponsor. Clearly, IFRS is a tailor-made thing for every enterprise, so you will not go get a keyless go entrance into such a situation. No, you have to have a dedicated team on the one hand, and on the other hand, you have to have also consultants who are, depending on the size of the company, as we are globally spread over the world, we were in need of one of the big 4 who helped us in this situation to start with the gap analysis, as Mr. Ahmed was mentioning. That's for sure the major task, and internally you will try to figure out what has to be covered and can be covered in which way. In parallel, you will have, or we had also, other consultants for fair valuation, for example, but also for what else? The most important thing. We did at the end of the year 2016 a complete IFRS transition already, including a complete set of disclosures. Yeah? We tested it and we got the signature from the auditors. So that was the starting point for our quarterly closing, so that we were very fast with the quarterly closing this year. So that's what I can clearly say. You need to have a dedicated team with experts, sure, but you need also the expertise from outside to make it happen in an efficient way so that it's running.
Great answer. Thank you very much. Now we're going to invite questions from audience on IFRS traditions from the panel of experts. Yes, please.
My question, I cannot pronounce his name.
Yves. Yeah.
My question is from him. Regarding the implementation of IFRS in Al Marai, you came across IAS 41 and there is fair valuation, fair value gain. So, on fair value gain, do we need to realize it in the corporation statements, or we don't do it like other PPA?
Now that's a hardcore accounting question. Who's going to take that?
No, I will not answer in detail. What I can say is as we have outside Saudi Arabia as well entities which are involved in farming, so we have to consider this somehow, and this is either crop valuation or mainly crop valuation outside. So that's which we have accounted for.
Does that answer your question?
Okay, fine.
All right. Any other questions? Yes, please.
convincing? Are we that convincing?
Question to Yves, because he was highlighting something which was very pertinent to our transition as well. There is a difference between external reporting and internal reporting, but it has to be aligned in one way or the other. So what kind of challenge which you have faced, specifically like let's say in Al-Marai, to align these both? And accordingly, alignment may be required in the budgeting process as well. So if you can share some challenges on that. This is first question. Second, the small one with from the partners. If there's an interpretational issues, as we have seen that Big Fours have some issues in interpretation. So we have a consultant, let's suppose, or along with that, we also as a management have some interpretation, and the auditors doesn't agree with that. So what is your advice on that?
Right. So how to align the internal management reporting with the external statutory reporting?
Yeah, it's a difficult question. You cannot answer in a second on that. I can only generally give advice on that. Yeah, it's a severe discussion with all the organizational business units, let's say. You have to, first of all, have an idea of the organization, how you want to structure, if there's need for, let's say, and then the responsible persons have to be involved into this kind of new reporting structure together with their finance managers. So now, from the internal part, we have two things to look into. Now it's getting complicated. We have, as you all know, a total cost method and a cost of sales method. So we at Al-Marai have, for example, chosen the cost of sales method for our external reporting, while for the internal reporting we have a blend. Yeah. So to get we are not intending to have 100% alignment between cost of sales and total cost method, but we are having an alignment of the major reporting lines. So if you have, first of all, clearly one way or one direction for your methodology, then it's much easier to prepare one structure. That's one thing. The other thing is regarding the budget. For the budget, we started last year already with a budget for IFRS purposes so that we have comparatives this year. Yeah. So, but what we have done at Al-Marai is, let's say, we have a very preliminary stage used for a reporting structure, which is only, let's say, aligning the minimal requirements to get a comparative between internal and external reporting, between budget and our actual management reporting. So in a second step, there might be more progress into that direction, and we are going into the next 2 years into another transition where we are looking into a more sophisticated, let's say, product, which should reduce the reporting time. That's the target.
Right. I am allowed to take one more question, that's it. So please.
Assalamu alaikum. Actually, I have two questions, linked questions. One is, the panel was discussing about that there are some fair value requirements which have been banned or not to be adopted now. So are there any disclosure requirements which mention in the financial statements that in the specific area we are departing from the requirements of IFRS and we are not following that? And if we are doing this thing, as IFRS 1 says that there should be an unqualified statement in the financial statement that the financial statement are prepared as per the IFRS, which we are not following now. So are the companies allowed, if they want not to implement IFRS 1 requirement during their transition, can they do that?
Good question, and I would like Khalil, you to answer this, please.
Thank you. I think they are, in this particular point, there is no sort of non-compliance with the IFRS, because what we're talking about is where the fair value option was given as well as the historical cost. So effectively what has been done by the CMA is omitting one of the options that is available, and therefore it's considered a full compliance with IFRS, and broad requirements from IFRS that it's allow any jurisdiction that if they want to omit any specific options of available treatment or actually to add additional disclosures, these are permitted and you considered as fully implementing IFRS and within the IFRS zone. So that's probably the answer in a short thing. I think the first gentleman asked a question about if there is a different thoughts or opinion between the management and their, let's say, consultant in the IFRS adoption and the auditor. And I think the best answers would be what my friend Fawaz mentioned about communication and then the timing and planning of it. You know, throughout my experience, which almost about 20 years, I haven't come across where it's really could not be resolved. It's only that become a pressure of time where things get tense. There is difficulty to spare the right time for both parties to explain their views and to digest the information and deal with it, or at least to explain exactly where is the views coming from. With the right communication, the right planning, usually you will reach to appropriate level of consensus and with also the reasonable level of consultation, at least is my experience.
Thank you very much. I wish we could take more questions, but unfortunately we'll not be able to, because I'm not allowed to continue the session. I've already been shown a red card from that corner. Now, gentlemen, it was a great honor for me to actually speak to you this morning. It was a distinguished panel for this type of discussion. I really thank you for your time that you've taken out from your busy routines to come here and share your expertise and your experiences with all of us. And I hope that our audience have enjoyed listening to you just as much as I did this morning. So I really thank you for that.
Thank you.
Thank you.
Ladies and gentlemen, may I request all the panelists to remain standing near the stage. May I request Mr. Adil, the President of the Institute of Chartered Accountants of Pakistan, to give mementos to our esteemed panelists. Mr. Fawaz Al-Fawaz. Mr. Khalil Al-Sadais. Mr. Ahmed Abdul Fattah. Mr. Yves Graff. And last but not the least, our moderator, Mr. Moazzam Ali Shah. Thank you, Moazzam. Thank you. Gentlemen, you may be seated now.